Hello everyone. Today our group will present about group audits. But before that, let me introduce our group members. Emedius, Frankie, Norakila, and Perry. Group audit referring to if a company has a subsidiaries companies, holding company is required to prepay group account in the form of consolidated accounts. Auditor for holding companies is required to express an opinion as to whether the company accounts and the group account show a true and fair view to the members of the holding companies. Requirements of relevant accounting standards. First one is Company Act 1965, Section 174. Section 174, subsection 2, where auditor is responsible to perform the audits and give opinion on the consolidation account. Meanwhile, Section 174, subsection 4 and 5, all about rights and principle of the auditors. Aside from Companies Act 1965, another requirement is Financial Reporting Standard 127 and 128, which is consolidated and separate financial statement and investment in associate. Principal Auditor, the auditor with responsibility for reporting on financial statement of an entity where those financial statements include financial information of one or more component audited by another auditor. There is a matter that need to be considered. First one is materiality of portion of financial statement, which is the principal auditor audit. Principal auditor knowledge of the business of the component, risk of material misstatement of financial statement of the component audited by other auditor, the extent of the additional audit procedure by principal auditor, and competence of other auditor also need to be considered. And now let us look at procedure of principal auditor. First one is preliminary stage. It is to obtain and prepare schedule of investment in subsidiaries showing opening balance of investment in subsidiary, additional or disposal of investment, verified 2 minutes and other document, ending balance, check accounting treatment for gain and losses on disposal, confirmation of existence of ownership of investment, obtain audited account or management financial statement of each component. Second procedure, detailed audit work by checking consolidation figure. Goodwill or reserve arising on consolidation, pre and post acquisition reserve, overall reconciliation and movement, calculation of minority interest, agreement of intercompany balance, adjustment and cancellation of intercompany transaction and balance, proper use of foreign currency rate for translation. Make sure proper disclose in necessary item related to transaction, company level, group level, and others. Third one, questionnaire. Given to other auditor, which include confirmation regarding internal control of subsidiaries, basis of accounting policy, balance sheet items, profit or loss item, exceptional transaction involve director and general matter, any limitation of scope pacing by others auditor, any qualification and other reason for them. Procedure if necessary, review others auditor working paper. System examination and documentation of auditor is appropriate. Tests of control and substantive tests have been properly carried out. Working paper is comprehensive. Review process of working paper has properly done. The financial statement follow accounting standard. Auditing carried accordance to approved auditing standard. Adequate evidence obtained in basis of opinion. Identified the intergroup transaction. Audit procedure are evaluate the client accounting system and internal control for identifying related party, Besides, obtain a list of related parties, review filing with the Security Commission, review minutes, review conflict of interest statement from management, review the extent of nature business transact with major customers, suppliers, and so on, review accounting record for large, unusual, non-recurring transaction, and review confirmation of loan receivable and payable for indication of guarantees. And now we look at responsibility of primary and secondary auditor in liaisons with other auditors. Holding company auditors or principal auditors responsible to audit both holding company's financial statement and consolidated financial statement. And now we look at the right of holding company's auditor, whereby right access to the accounting and others. For the record of subsidiary company, it's obtain information and explanation from the officer or auditors of the subsidiary companies, besides obtain information and explanation from the officers or auditor of related company. For subsidiary company auditor, on the other hand, only responsible to audit and the respective, whereby subsidiary company's financial statement or sub-subsidiary company's financial statement. Who is the other auditors? Affiliated firm or unrelated firm. According to AI 600, when the principal auditor uses the work of another auditor, the principal auditor will be affect the audit. There is matters to be considered. First one, the independence of other auditors, company competency of other auditors, either professional membership, ethics training, and audit methodologies. Besides that, consideration on communicate at the beginning stage, such as accounting, auditing, and legal requirement. Besides, area of significant risk, area of special consideration, intercompany transaction, for example. Another consideration is the work of other auditor must be sufficient appropriate evidence for group audits. If evidence is sufficient for appropriate group audit, no additional procedure. Number 5 is risk of material misstatement at group audit. Principal auditor needs to certify that all material areas of financial statements of the subsidiaries has been audited satisfactorily, to discuss with other auditor to synchronize the audit work, besides to lead the planning, especially the timing of the group audit, specific risk area and audit procedure, intercompany balances, and so on. In evaluating the audit work of other auditor, the principal auditor would advise the other auditor about the independent requirement and obtain from the other auditor a written representative. Besides, the accounting, auditing, and reporting requirement are and obtain from other auditor a written representative. The principal auditor would inform the other auditor matters such as area requiring special consideration, and principal auditor should review audit procedure applied, review a written representative of the other auditor, and review working paper of other auditor. If the principal auditor is not satisfied with the working paper, the principal auditor might request the other auditor to perform the supplementary test, or alternatively, Once reliability of work carried out by the other auditor is in question, the principal auditor should perform detailed review of the other auditor's working papers and give attention on existence of proper documentation of audit work carried by others auditor, adequacy of audit programs, scope of work covered by the others auditor, whether appropriate tests of control and substantive procedure have been performed, whether adequate audit evidence are obtained, and whether the work carried out by the engagement team are being adequately reviewed. And now we move to another topic, using the work of others. Others refer to other auditors in group audit, internal auditors, and the expert. There is consideration to use the work of other auditors, expert and internal auditor. Expert is a person possessed of special skill, knowledge, and experience in particular fields other than accounting and auditing. Engaged or employee by auditor or client. Planning to use the work of expert, the one is materiality of the item in financial statement, inventory, the risk of material misstatement, nature and complexity, beside reliability of client evidence. Some assertions require experts' evidence, first one allocation or measurement, such as cutoff, and valuation, such as quantity of inventory. And now we look at considering the work of expert. The expert is professional competent to take up the engagement, such as license, professional membership, and experience and reputation. Secondly, objectivity of the expert, impaired when employed by client or related to the client. Third, term of reference, such as scope of definition, quantity or quality times value. Willingness of the expert to discuss on the work. The auditor does not have the same expertise and knowledge with the expert. Besides, discuss on the assumption and method used by the expert to determine the reasonable of the values. And now we look at audit procedure to be performed or considered by the auditors. The first procedure is to ensure that the expert is professional, competent to take up the engagement, such as license, certificate, membership, experience, and reputations. Second one, to assess objectivity of the expert. The objectivity of the expert will be impaired when the expert is employed by entity or related to the company in the other manner. In this case, auditor may need to take up additional audit procedures. The third audit procedure, auditor needs to consider the objective of involving of the work of an expert, for example, to account for as inventory figure, the scope of work of the expert work. The expert need to just give the auditor the quantities of mineral underground, but not for market value, so that this case auditor may need to seek for another expert opinion on market value. Next, the assumption and method used by expert. The auditor should have some general knowledge about assumption and method use. For example, on valuation of land, the auditor may need to know the market value of the land surrounding area to gauge the reasonable market value reported by the expert. Next, the auditor of course does not have the same expertise and knowledge with the expert. However, based on knowledge and experience, should go for appropriateness and reasonableness of assumption and method by the expert and figures reported. The last procedure, ultimately the auditor should assess the appropriateness of the expert work as audit evidence regarding the financial statement assertion being considered as a basis of opinion. And now we look at reporting consideration. If an expert does not provide sufficient audit evidence, the auditor still have to resolve the matter. There is two circumstances. First one, to resolve, the auditor may discuss again with the management and expert. Second, applying additional procedure, including engaging another expert if required. Meanwhile, on the other hand, if still unresolved, the auditor may notify the audit report. First one, unqualified opinion with the emphasis on matter. Secondly, auditor may issue qualified report. Therefore, that's all from us and have a great day. Thank you.